You're watching us here on very special programming. It's the red carpet of the 20th India Business Leader Awards. It's a year of milestones. The 25th year of CNBC TV 18, the 20th year of India Business Leader Awards. What can one say? Decades and a quarter century of excellence. We here decorate, award and respect and get inspired from the best in business, politics, leadership, entertainment and sport. It is just so much inspiration. I'm Mangalam Malu. With me, my colleagues Nigel D'Souza, Reema Tendulkar. All of them will be getting you important conversations, exciting highlights from the event that is likely to begin in just half an hour from now. But before we begin, let's bring with us Zareen Daruwala of Standard Chartered. Zareen Daruwala has been with us, partnering us in this journey of excellence of India Business Leader Awards for many, many years now. You know, it's always a pleasure speaking with you, ma'am. For the years that you've seen India Business Leader Awards and CNBC TV 18, how would you describe this journey, the journey of evolution and the journey of excellence?
I think the IBLA Awards has really sort of evolved, and today it's an award that has a lot of stature. It brings out the best. You see the winners, you see businessmen, you see government people, you see officials. So it's a great cross-section of people that you see in this function. And the platform actually not only recognizes corporate India achievements, but it recognizes achievements in the field of sports and many other fields, CSR, etc. So it's a really nice and broad-based kind of platform that is there. And I wish IBLA all the very best. I'm sure the next 20 years will be even more glorious. And as Standard Chartered, we are really proud to be associated with this platform for the last few years. Thank you very much.
Well, you know, what I can say is that IBLA will be glorious for the next 20 years if your continued support stays for the next 20 years as well. More than that, your presence as well. Every year you keep inspiring. You know, we've heard multiple conversations with you through the years. You know, the jury discussions that happen, the sort of individual details that happen out there. So it's very crucial. What do you think has changed over the last few years, and what do you think has stayed the same over the last few years?
I think the number of new categories that has been added, especially recognizing the startup, the Young Turk of the Year, it's a great inspiration for young Turks to be sitting alongside the, established business leaders, and also recognizing CSR and, certain other aspects of performance. And the sheer grit and determination that you see of some of the winners, it's something awe-inspiring. The stories are really great. So it's really lovely to be associated.
Incredible. Have a great evening, ma'am. Stay with us as well. With that, I'll hand it over to, I guess my colleague Nigel has someone very special with him as well. Nigel, it's over to you.
Well, thanks a lot for that, Mangalam. We have with us a very, very special guest, someone who's been a friend of CNBC TV 18 over many, many years, Ms. Sunita Reddy. Well, thanks a lot, Ms. Reddy, for joining in today, and it's a big day for us. Could you tell us a couple of instances that you remember in this journey of the last 25 years with your association with CNBC TV 18?
Well, it's been a wonderful journey. I remember Shireen interviewing me as a young Turk. So you can imagine how long this journey has been. And I think especially I admire the research you do. Most of the questions that you've always asked in an interview are always well researched. And you have to appreciate that you come from a point of data with a little less emotion. And that's unusual today. So congratulations on all of your achievements.
Well, Ms. Reddy, what you all do for your patients is what we try to do for our viewers as well. So we're just trying to give the best out. So on that front, we are both on the same page. Well, tell us about, we're almost done with 2024. For 2025, what are the near-term goals that you have for the company and the organization on the whole?
It's all about growth, and growth by improving clinical outcomes. We really look at super specialization as well as reaching into making sure that volumes and markets that we cover are large and keep growing.
Well, Ms. Reddy, as you said, you have a long association with us, all the way from Young Turks, to a nifty company that Apollo Hospitals is now part of. give us a sense about, what we can do better as well. It's been a lovely, lovely journey. But if there are a couple of aspects that you would like us to work on, such that we give a little bit more to our viewers.
I think maybe collaboration with international best practices would be good, especially in healthcare, a recognition of what's new and happening in innovation. In each of these industries, as we look at innovation, as we look at research. So today I really appreciate some of the awards that are being given out. They're based on making India better, making India innovative.
All right, Ms. Reddy, thank you for joining in. And in fact, even with a bit of a sore throat, you oblige us. But thank you so much, and thanks for being a friend to CNBC TV 18. Well, guys, that's Ms. Sunita Reddy, who's joining in for a quick chat. But Mangalam, over to you. Who do you have with you?
I have with me Manish Shokani, a veteran of many, many cycles, and we've seen a bunch of cycles for our market as well. They've gotten shorter. 25 years of CNBC TV 18, 20 years of India Business Leader Awards. Your comments on the economy, the markets? We've asked you a lot of that. Let's talk about, celebrating excellence.
Well, first of all, congratulations for, your 25th anniversary for CNBC. The awards for 20 years have been now around and very, obviously very respected. And the economy is in good shape, so it's a buoyant mood as we come in. Maharashtra election results are just here, so everyone in Bombay is also very enthused. So we hope we keep that spirit going, and let's hear what the award winners and the ministers have to say.
Absolutely. What is it that you would be particularly interested in when it comes to what the ministers will say, largely because it's coming on the back of this victory in Maharashtra?
Well, the market's been waiting for the revival of government expenditure, as you know. So the Q2 had slowed down, largely because of the elections in June quarter, June to September. So, and Mr. Gadkari, of course, very popular. And same way, our Commerce Minister, we are waiting for all these FTAs to be signed so that Indian exports can also then take off. Both of them have been doing a great job. So let's hear what they have to say.
What are you more concerned about right now? The lack of government expenditure here, or the kind of commentary that is going on in the US right now with Trump and Musk coming together, the Department of Government Efficiency?
Well, US is the largest economy in the world, is the largest market cap in the world, so you can't ignore what's going on. But like you say, you have to do what you can do, not worry about what others are doing. And when it happens, one responds to that. And we are actually on friendly terms with, I think, every country in the world. So not a lot to fear on that front. But we clearly do have a lot of work to do in our own country. And I think we are on that path, and we'll get there.
Right, just a couple of questions before we let you go and enjoy the evening as well. Very recently, we had FIIs turn the corner. I mean, we saw 3 days of consistent buying in the cash market by the FIIs. Do you think that is a turn, or it's just a flash in the pan? What exactly do you make of just the last 3 days? Very little data.
Well, look, no one knows when anyone sells. As I've said before on your shows, that they basically sold 1% of their holding, which even you and I would have done, because you always want to churn your portfolio. The professional money managers like to lock in gains also towards the year end, and US funds typically do have November ending, as when their bonuses and all are decided. So it's not a surprising phenomenon. And when there's good paper, they all are coming back in the market as well. Also, we are just 3 or 4% of world market cap. US is at 65. So this clearly has more headroom to go up. And it's a matter of time when all the global funds will start having us in the global indices. And this money can only grow from here. So I wouldn't have worries on that front.
And anything else that you're worried about in particular? Because the valuations have come off as well. Are you deploying cash?
So valuation is, what we all are concerned with as investors. And we always like asymmetrical bets. India is not an asymmetrical bet. It's a market which is now priced for growth. And growth has slowed down. So unless we get that growth and we get the earnings back, the market will have to tread water for a while. And as someone who's long-term invested here, if one has to wait patiently to see the next leg of growth, one will do that.
All right, just before, we, toss it over to Nigel, who has a very special guest with him as well. Just a final question. It's something that you've spoken about in the past as well, the valuations that Zomato has. You have a competitor listed now, and there is a valuation gap between Zomato and Swiggy. What do you make of this quick commerce space right now? Do you think competition would bleed out the profits for these companies?
So I don't want to comment on individual companies. And look, everyone is fulfilling a social need. They're creating a lot of jobs. People who want product delivered to them are getting it quickly. So it's clearly a social need which is being fulfilled. How this plays out, who eventually wins, it's a bit like the airline industry, right? Too many people come in and they crowd the space, you don't end up making money. But I'm sure they have more strings than they bow as they add more and more product into it. Let's see how it goes. But I wish them all well.
All right, we take that point. Toss it over to Nigel as well. Nigel, you have someone very special with you.
Well, that's right, Mangla. We have with us Mr. Manian, who's joining in. Well, Mr. Manian, thanks a lot for joining in. Appreciate you coming to celebrate this big occasion with us. Well, first, just take us through the association with CNBC TV18. You've been a friend and, in fact, a supporter as well. Give us your quick, run us down the memory lane.
No, I think CNBC is absolutely the pioneer in business news and business TV. And I've been associated with CNBC for maybe 20 years now, out of the 25 years that you have had. So I think it has been a fabulous journey. You almost have defined what business TV journalism is all about.
Well, we thank you, sir, for that, and we thank you for being a friend as well. But, there's been this clamor of maybe, in fact, there is a lot of pain in the system as of now. Do you think it will settle down in the near term, or do you think there is more in store? Because the fear is that this could escalate from here on.
You mean to say the slowdown in the economy?
The slowdown in the economy, as well as, the quality of the books as of now, particularly with the smaller lenders.
Right. So, two parts to that. I mean, if you look at the economy in general, I think, last quarter has been slow. That, of course, the numbers are out. But as the finance minister said, it may not be structural. It may be a cycle that we are going through. I think overall things seem to be reasonably good. So I would say the medium-term India story still remains positive, while we might go through a few quarters of pain. But with this new release of liquidity into the system in the last policy by RBI, I do expect things to get slightly better on liquidity front and therefore interest rate front.
Okay. All right.
Coming to the pain in the books that you talked about, I think the pain, if you look at it, it is a very pain coming out of unsecured lending and the small ticket unsecured lending side. So it's not a generic thing. The pain is not generically true across the books of the banks. It's a particular niche that is going through some difficulty. And the reasons have been multiple, right? Different states have had different events which have caused that pain. So I would say, again, these are not a broad economy kind of pain. I am reasonably hopeful that these will last a quarter or two more, not more than that.
Well, that's very, very encouraging to hear, because the fear was that maybe we're in for a prolonged period of pain, but you don't seem to be sounding so pessimistic, which is good news. But you briefly spoke about what the RBI governor did as well. And they've given us that token 50 basis point CRR cut. What are your expectations from the RBI governor and from the RBI in 2025?
No, I think the narrative is quite clear, right? Of course, there is a RBI is trying to juggle between the inflation part of it and the growth part of it. I think they have to play the balancing act on that. And that also means the growth part requires rates to drop, and the inflation part requires rates to be kept at where they are. So I think it is going to be a phase where RBI will be watchful about watching both these things together. And I think the CRR cut was a good intermediate kind of thing. It will have a downward rate impact. But at the same time, the policy rates has not gone down. So I think RBI is trying to balance the two. And I think that balancing act will continue for a couple of more policies, I think.
Well, Mr. Manian, for me, what was encouraging was that he said that growth, the pain has bottomed out in quarter two, and maybe inflation will cool off in the next quarter or so. Thank you so much for speaking to us here on CNBC TV18 and wish you a good evening ahead.
Thank you.
Well, that was Mr. Manian telling us that maybe in the near term we could see some pain in the books, but that's not a structural problem, and hopefully things should improve from here on. He also gave us a brief insight into his expectations for 2025 with some rate tinkering. But Manglam, I believe you have another banker with you. Over to you.
That's correct. From Federal Bank, let's go across to IDFC First Bank. We have with us Mr. Vaidyanathan as well. And it's funny that we are 25 here at CNBC TV18, and every subsequent conversation that we have, you seem a lot younger than the previous conversation that we had as well. Now with the compliments done, let's ask you, rarely do we get a banker, just the day after the RBI policy. And this one was interesting because of the CRR cut that came by as well. And this also at a time when, there is some stress in the microfinance industry. So on both these accounts, what do you make? One, on the CRR cut, How do you think that will, infuse more liquidity into the system, alleviate the stress that we're seeing right now? And secondly, on the stress that you're seeing at the microfinance level itself, what are your comments?
So let's take one thing at a time. Let's talk about CRR cut.
Yeah.
So CRR cut has given a release of 1.2 lakh crores to the system, quite significant actually, and it has its own multiplier effect because money, it rolls over more into the system in a multiplier way. So I think this will, ease up liquidity in the system, release cash for lending, and in a way will start powering growth again.
Well, specifically for your bank, how much do you think would be the benefit?
I haven't done the calculation offhand, but basically it will be, as pro rata. But I think the more important thing is the easing of liquidity. The overnight call money rate had gone up to about 6.75%. That could ease out about 25 basis points. So money available, money becomes cheaper. I think directionally it's quite clear where it is headed. So now the next policy cut, hopefully, in a month or 2 months, it should happen.
Specifically, it'd be better for you as well, right? Because you'll have a little more cash to lend as well. Speaking about lending and receiving back, that's more important right now. How is the stress at the borrower level?
So, as you can see on the corporate level, people have lots of cash, there's no problem there. On the retail side, there's no problem there overall. We're talking MFI separately. Retail side, there's no problem. MSB side, there's no problem. So these businesses are running perfectly well. You can see our numbers. So on the microfinance side, we have about a 12,000 crore book. That's it's going through its own challenge at this point of time.
All right, we take that point. Thanks a lot. We'll have a short conversation now and a lot longer conversation later as well. But in the meanwhile, we do have with us, Mr. Baba Kalyani. Nigel, you are waiting to have a conversation with Mr. Baba Kalyani as well. It will be very interesting to see what are the kind of insights that he has to give on the economy and his business.
Well, that's right, Mangalam, and particularly because, he heads a conglomerate that's spread across various parts of the economy, both domestic as well as global. Well, Mr. Kalyani, thanks a lot for speaking to us here on CNBC TV 18 and for being a friend and a supporter for all these years. Well, give us first that brief insight into your big memory with regard to your journey with CNBC TV 18. The last 25 years have been special for us, but there would be one particular instance that you remember.
Well, the best instance was when Shireen interviewed me in Pune. Okay, that was the best instance. I think that was a very good kind of vision that we were able to project. And first of all, I must say heartiest congratulations on your 25th year as a channel, and of course heartiest congratulations on the IBLA award for the last 20 years. And the transition that I have seen in your whole award system it's become far more broad-based, more inclusive, and it's good for India. You're able to recognize people from many different spaces, not just business, and I think that's good.
Well, Mr. Kalyani, since you spoke about both the company as well as India, we'll get to both those two in just a bit. First, let's focus on the company aspect. You have presence not just in the domestic market, but you have a fair bit of exposure globally as well. So give us your insight about this perceived slowdown. What do you think about it? As of now, do you think we'll be able to battle it? Because we've got a big vision as a nation. 2037, 2047, there's a big vision ahead. So how do you see things shape up in the near term? And what about that runway we are on? We're set for takeoff.
I won't worry about slowdowns for a quarter or two. I think that's going to be part of any business, any economy. Every economy is going to go through some ups and downs. But I think we have a clear path which has been put ahead of us by our Honorable Prime Minister, the Viksit Bharat roadmap, 2047.
Yes.
And at least we as a business, we are pretty much focused on that path. We are very clear that we want to grow. We want to grow in the spaces that we have created for ourselves, and we don't see any problem in growing. We may have a few quarters of bad growth,
yes,
but that's part of the game.
Well, that's right. If that's part of the game, that's good news. And on the domestic front, you're not seeming worried at all. But what about on the global front? Do you think, the supply issues, there are parts of the globe, Europe and various other parts that are going through a slowdown? How do you see that shaping up?
Europe is going through a slowdown, Germany more so. But I think it also throws a new opportunity for Indian manufacturers. Because I see I have a lot of close friends in businesses in Europe. I see many of them now thinking in their boards of shifting businesses out of Europe and moving them to other countries in Asia. So I think this is an opportunity for us. If we play our cards right, a lot of that will come to India. because other countries like Vietnam or Malaysia don't have capacity anymore. They've run out of manpower.
Right.
And we have a lot of capacity. We have manpower, we have technology, we have states that are hungry to bring businesses in, to set them up. So I think we can convert this problem into a big opportunity, and that's what we should be doing.
Well, I love the optimism, sir, that you always bring. I'm asking you about a slowdown out there. You're saying there's an opportunity for us. And that's the way Indian entrepreneurs as well. That's the kind of pedigree they're made up of. But final question before I let you go. You'll raise some money by the QIP route. The street wants to know, what is Mr. Kalyani going to be using this money for? Please give us a brief insight.
First of all, large part of that money is going to go for our expansion. We are doing some M&A, so some money is going to go in that, some money is going to go into capacity that we want to create, and some money is going to go into reduce our debt globally. And just keep our balance sheet strong and healthy.
Well, I need to quiz you one more question. What about that M&A opportunity? How soon should we hear about it? Because you've got the watches now, the ammunition is with you, and you're set to fire. How soon do we hear about this M&A opportunity? And is the target company, is it domestic or is it international?
No. We are focusing on domestic companies first because we see much higher growth opportunities in the Indian market. I mean, the Indian market is going to go from 4 trillion to 20 trillion or 25 or whatever that number is. There is no place in the world that's growing at that space.
Okay.
So the growth is here. So the opportunities are here.
And we'll wait by to hear about that. Thanks a lot, Mr. Kalyani, for speaking to us here on CNBC TV 18. Well, interesting chat with Mr. Kalyani there, saying that the near-term slowdown isn't something he's worried about. The global slowdown is actually an opportunity, and he's hinting that maybe there is some M&A in the works as well. Mangalam, that's about Mr. Kalyani. But you have got another guest. Over to you.
That's correct. So you heard about a conglomerate, you heard about the opportunities for the economy. What does that mean for investors? And who better than the veteran Mr. Ramesh Damani to speak about that? Thank you, Mangalam. The last time we spoke, the optimism was slightly low. We had seen a bit of a correction. Now, since then, a lot of water has, flown under the bridge. The Maharashtra election verdict is out. How are you feeling? Do you think we've made a bottom?
Yeah, great question, Mangalam. If you look at the quality of the advance, the quality of the new highs that we made, it suggests that what happened post-March something was just a correction in the market. The correction now seems to be over. And I think the quality advance and the new highs suggests that we go back and test the old highs.
How long before we do that?
I think it's not too far. Maybe in the new year we'll test that. Because, the market is a roaring force again. And the breadth of the market and the quality, the number of shares making new highs or lifetime highs is not small. And that will not happen if the market is topped out.
What do you think of the fundamentals? Do you think, the consumer slowdown that there was, the slowdown that everyone was talking about, was seasonal in nature and transient, and now we are looking at better growth opportunities coming in?
I think the market clearly felt that. That's why it corrected 10%, but it was just a correction, and now market's looking at better days ahead, so that will happen. I will only caution investors that on January 20th, when Trump takes over, there could be a whole different ballgame in the world in terms of economics, in terms of tariffs, protectionism, globalization. The world will change in ways you don't understand. But that is still January 20th and maybe 3 months after that.
The world will change in ways that not a lot of people understand, but you're the one who has seen so many cycles as well. So what would you suggest one do? Just stay the course, stay invested. If there was fresh money to be deployed, what would be the sectors that you would think are now looking a lot more attractive than what they were earlier?
Well, that's a very simple answer. The bet in India is always to remain invested through the volatility which we recently saw or we've seen before. As I've often mentioned to you, when I came, the index was below 1,000. Today it's closer to 80,000. So the bet is to remain invested in India and high-quality businesses. And there's so much picking choices, like a virtual buffet. You can choose so many dishes, Indian, Italian, Chinese, whatever you want. So I think it's a good outcome and a good bet to remain invested.
And the new highs would come from what sector?
I think it's coming from a variety of sectors. I see my mid-cap portfolio across the board, from pharma, from tech. So many stocks are making new highs that itself cannot be an accident or a coincidence. I think that one stock, maybe it's a flash in the pan, but then 10, 20, 30 stocks in your portfolio that are all-time high, it suggests a much broader undercurrent in the market.
I'm itching to ask you this question, and I probably know the answer as well. Bitcoin. Have you dabbled in crypto?
I haven't, and I would be skeptical about it. I think there's a new generation of people that want to invest in Bitcoins. Trump is coming, is going to favor Bitcoin because Elon Musk is now in his corner. But I'm firmly with Warren Buffett in the camp that it offers no intrinsic value, just speculative vehicle. Merchant bankers are retrapping it because they're getting fees. I would avoid it.
All right, you would avoid it. You were speaking about high-quality businesses and a buffet to choose from in India. Where else would you get that buffet better than one of these Indian hotels, restaurants itself, right? So Nigel has with him Puneet Chhatwal. Nigel, Mr. Damani was just speaking about the opportunity that we have in India when it comes to so many sectors, and hospitality has been one of them, which has seen to be, a bit of a secular uptrend and a macro uptrend as well, where we are seeing in terms of behavior change. You have Puneet Chhatwal with you.
Well, that's right, Mangalam. Thanks a lot for that. And Mangalam, this time around it's going to be double the marker, because we're going to be focusing on two sectors, which is a big opportunity. One is, in fact, obviously the hospitality sector, and the other one is the stock market. We have with us Mr. Ashish Chauhan as well as Mr. Puneet Chhatwal, who join us. Thanks a lot, gentlemen, for being a friend of CNBC TV 18 and supporting us over all these years. Well, Mr. Chauhan, you go first. Tell us about this dip in volumes that we've seen in the recent past, and how are you feeling about the markets? Clearly, there's a lot of liquidity on the domestic front, which is clearly holding one end up.
In a way, the volumes have dropped over last 1 week, and expect to drop further, especially in derivatives, because of the new regulations that have come into effect. And the liquidity overall from the Indian side is pretty nice. At the same time, the foreign money was going out, and now I think it has started coming back in. So probably we'll see some good momentum there.
Well, the broad sense is that this, drop in volumes could be just in the near term, because there are a couple of levers as well in place to see a pickup as well. You have more stocks getting added in the F&O, so some part of that will be offset. What's your outlook in terms of volumes? And the domestic participation, sir, is something that's really something that's, has caught everyone's attention. And everyone is part of this equity cult that we're developing here in India.
I think equity cult is where we need to focus on, but regulators also rightly worried about the derivatives and over speculation, and it has happened before in other countries like Korea. Even in India, if you recall, in May 24, literally the currencies market, currencies derivatives came down to close to zero. And that is true in Korea in 2012. The government also took kind of stand against heavy speculation, and then today also after 12 years, they have half the volume of what used to be there in 2012. So I wouldn't kind of bet against the regulators in any case. So I would say everyone should take this in their stride, that derivative is something the regulator is clearly not wanting to have activities in a high, sort of a big way. Equities investment is what the regulator wants, and I think that is the correct way.
Well, indeed, the focus more is on investing rather than trading, and ultimately it's to develop this equity cult into a stronger one for a longer duration. Well, thanks a lot for that. Well, Mr. Chhatwal, it's the most wonderful time of the year, is what normally we say during Christmas, and for your industry, it's probably the best. I personally am going to be traveling at the end of this month, and getting a room is quite difficult. Airfares are going through the roof as well, so you must be feeling very, very good about business.
Yeah, that's true that Q3, and especially the months of November and December, have always historically been the best on a pan-India basis. But I have to say the entire year has been good. The last 10 quarters for us have been historic wins. I don't see that changing in the near future because of where India is positioned today. And, even though 75 years later, post-independence, hospitality sector is here for a mid to long-term scripting, a new story, and contributing significantly to the growth of GDP in the country, to direct jobs and indirect jobs. And I cannot specify enough, as I've done all the time in my journey with CNBC, this is the sector that is the biggest multiplicator of jobs globally, both in organized and unorganized sector. And we feel very honored and privileged to contribute our share to it.
Okay, and do you think that this is going to be practically one of the best end of the years that we have seen in the last many, many years?
Well, every year you ask the same question.
But this time I want to know if it's even better.
It has to be. Whatever we did yesterday was yesterday. What we do today has to be better than yesterday, and what we do tomorrow should be better than today.
Indeed, and also on the room rates, when I quiz you about that, you've told me, but Nigel, it still didn't move for many, many years, and now it's catching up. Is there more headroom out there? You know, the customer side of things are a little bit nervous when you talk about this part of it, while your shareholders are enthused. I think in the last 1 year or so, last 1 month, I think, it's been one of the outperformers, Indian hotels.
Well, stock market is one thing that has been answered by your other guest, Mr. Chavan. But I think our job as management is to deliver, and our job in terms of customer centricity is to meet or exceed customers' expectations. So the price-value relationship has to be so good that the success is sustainable. And I see no reason that institutions like Taj, as the oldest operating company of Tata Group, should not, keep delivering on that promise.
Yes.
And we usually say we promise, we deliver, and we deliver a little bit more than what we have promised, and that mantra stays on.
Well, thanks a lot, Mr. Chavan, as well as Mr. Chatwal for joining in. Well, interesting comments coming in from veterans of the industry, and they are sounding very, very optimistic. But I believe, Reema, you've got another guest with you, so over to you.
Yes, indeed. I've got Andrew Holland of Avendus Alternate. Andrew, thank you very much for joining in. You've been in India for as long as CNBC TV 18 has existed. What has been your fondest memory? Because you've been with us from day one.
There's so many fond memories, but I mean, obviously, what I see now from where we were back in 2000 is, people just watch CNBC. They've always been watching CNBC, but, the fact it's not just about the markets. It's been how you've educated people through having mutual fund managers on the channel and corporates on the channel, and you brought really everything that we were kind of looking at to Main Street, and I think that's been the biggest single factor. I think when I meet investors, they say, Andrew, I see you on CNBC. It's always I see you on CNBC. Nowhere else.
Fantastic. So, Andrew, I'm going to put you in the spot here. Whenever you talk to us on CNBC TV 18, you always give us the long-term picture, and everything's fine and rosy in the long term. But I know many, many years back, there was this one instance where you said that, markets are going to fall very sharply on a Monday, the following Monday, and markets tanked more than 10%. So just talk to us about the near term, because things have been very, very volatile. How do you see the markets now?
Well, I'm not looking for that kind of sharp fall, but I think the 20th of January is a big event with President-elect Trump taking over the new U.S. administration, and I think that's an event that we have to be very careful about. So I'm very cautious between now and then. The markets might, in the very short term, because FIIs will go on holiday and domestics will have the full range to have investing. But I think come January, all bets are off, and I think it's going to be a very volatile January ahead of us.
Would you recommend lightening positions if...
So I've said a few times that sometimes the strategy is having cash, just sitting there waiting for some of these events to pass through, and then taking your view that, even if you miss the first 5%, it's okay, right, in a longer bull run. But just to get caught in some volatility which takes markets down, which we've seen recently, right, it's been quite painful for a lot of retail investors. So sometimes just sitting there saying, I can wait.
So what makes you so cautious about Trump 2.0, considering under Trump 1, he's a businessman, and things were fine, markets did well?
See, there's many things about in terms of the tariffs. I think the narrative for India is that we're better off than anyone else, but sometimes it doesn't work out quite the way everyone is saying. So I'm just a bit sceptical that it's going to be exactly as most of the market commentators are saying at the moment. So I just think wait for the event. Wait to see what's going to happen. Some of that narrative will come out beforehand. So I think just being cautious is the right way to be.
And soon after, the 20th of January, will be the Indian budget. And we know things have been slow on the capex front. Corporate spending has also been weak, and therefore growth has been hurting. Q2 earnings were very disappointing. What can we expect on the domestic front?
So I'm not expecting anything from the budget. I know we keep playing it up each year after year, but unless there's big tax cuts, then there's no real reason to get too excited. I think for us at the moment, there's no catalyst for our markets to go higher. Valuations are very high. The economy is slowing quite quickly. and there's no interest rate cut. So I don't think, even with government spending picking up, that multiplier effect will play out so quickly. So I think earnings are going to remain under pressure for the rest of this year.
Okay, thank you, Andrew, very much for joining in. Enjoy the event. With that, it's over to Nigel and Mangalam now.
Nigel, Mangalam, thank you so much. What a wide array of people we've been getting views for as far as, the today's event is concerned. We have another such person with us, Mr. Balasubramaniam, the MD and CEO at Aditya Birla AMC. So thank you so much today for being here, for talking to us. And what a great time to speak to someone like you who's seen flows coming into the equity markets from the retail side, from the domestic side, so closely, the trends there. Recently, when we saw the foreign institutional investors being on a selling spree, everybody was worried and they were looking at that figure in terms of when do we see FII buying and how much other domestic mutual funds or the domestic institutions buying. What is your assessment? How do you assess the behavior as far as retail investors during such tough times are concerned, and how has it matured for you?
I think it's been a great time for Indian mutual fund industry in penetrating into the deeper parts of the country and making sure that retail investors participate in the India growth story. So the hard work that has been done by the MF industry for the last number of years has given a huge benefit this year in terms of channelizing the savers' money into the capital market through the mutual funds from an SIP.
Correct.
In fact, look at one of the number, which is SIP number, which comes every month, it keeps rising, and today the run rate is about 25,000 crores per month. Gross inflow, let us assuming the net inflow is about 11,000 crores, but still close to about 1,30,000 crores coming in only from an SIP. Is something amazing development that we have seen. This has been, we all have been working for this, praying for this for many number of years. How do we make sure the Indian retail investors are made to participate in the Indian equity market? That's something that is finally is coming true. And this, in my own belief, will continue, given the fact that still 9% of the equity ownership is coming from retail.
Correct.
Only about 7 to 8% of the mutual fund ownership in the stocks is also collectively. If you look at the retail contribution in the ownership of Indian stocks,
Correct.
is only about 9 to 13%.
Correct.
That means we still have a long way to go. As against the 43% of the ownership in US is coming from retail investors.
Absolutely.
When you compare that, I think we still have a long way to go. And second is, given the fact the interest rates in India remain the investment vehicle for investors, which has remained in the range of about 7 to 8% in terms of interest rates. Whereas GDP has been growing at about 11 to 12% of the nominal GDP. And the equity market for the last 5 years, or 10 years, or 15 years, 20 years, if we take, has given an average return of ranging from 14 to 18%.
Correct.
So when this return differential very large, and also the growth story remains very, very promising for the country, my own belief is the Indian flow that has come in, it will be an autopilot. So I think hard sell that we all used to do in the past, we don't need to do a hard sell. It will be actually a natural flow that will keep coming in. At the same time, market also go through a consolidation phase, which will also give an opportunity for investors actually to consolidate their portfolios and keep raising their investment over time, which is what we are seeing in the last few months as well. When the FI selling was there, not only we are observing, we also see the flat market.
Absolutely.
Whenever see the flat market give a consolidation, it gives some kind of leg room for investors to stay cool and calm and understand market fluctuation will remain part of the game. At the same time, stay convicted.
Absolutely. You spoke about two things. One is that a lot has gone in from the industry, from the regulator, and which is why you're getting this behavior from retail investors today. What I want to understand from you on a separate topic is that in India, even today, a percentage of household savings to equity markets stands at about 4.5%. We see developed economies, US, that has gone to about 14, 15, 16%. What will be the big headline number that you would be watching out for? Not today, not this year, but let's say next 3 to 5 years, in terms of where would you want to see the retail ownership or the total ownership of household savings to equity markets, let's say in the next 5 years?
See, it can easily double from where we are today. That's one. I think where from will come, there's more and more savings getting moved into the, getting diverted into capital market financial instruments, such as an equity, mutual fund, other asset classes. You will find the percentage of the bank deposits, which currently is about 20% of the banking industry size, is the mutual fund industry size.
Correct.
I would look for about 50% of the banking industry size will be the mutual fund industry size over a period of next 5-6 years.
Correct. And, you know, during this journey so far, we've seen various sorts of statements coming from every corner. Somebody saying that a higher inflow into the markets affects the bank's current account, savings account ratios. Somebody saying that the spending has reduced because a lot of money is going into savings through equity markets. How do you look at all this noise? And in between, where do you see the code? Do you see and believe that there is space for every asset class, even spending, along with the growth in the equity markets and the savings and the money going there?
I think all will go hand in hand, and given the fact that growth is permanent, it may go through some ups and downs, but otherwise the growth is remain permanent. The government focus on taking the economy to the 10 trillion economy and beyond by way of setting up a target of Viksit Bharat. All of them will lead to only one, the growth will continue to remain strong. But at the same time, given the fact that we are also linked to the global economic growth and fluctuation that we see in the rest of the economy, India also will go through their share of pie. At the same time, margin of safety in India will continue to be very, very strong.
Okay.
Because the optimism and promising growth of the Indian economy continue to drive the growth in the economic growth and also sentiment.
Okay. Thank you so much for speaking to us. I'll let you enjoy the evening from this point. Thank you so much for sparing the time.
Yeah, thank you.
Okay, thank you, Yash. Okay, so I have a very special guest with me right now, and that is the Blinkit co-founder. No one can stop talking about quick commerce. So let me get Albinder Dinsa of Blinkit. Thank you very much. You've been the man of the moment now for the last many, many months.
Thank you so much. We're very lucky and have a lot of gratitude that everybody thinks you're doing well. Yeah.
You are doing fabulous. We've seen explosive growth. Do you remember yourself 25 years back? We're celebrating 25 years of CNBC. What were you doing back then?
I think I was preparing for the entrance exams to go to college.
And if it wasn't for Blinkit, what else would you be doing?
I'd probably be, a techie somewhere.
And what's the advice that you would give to yourself 25 years ago?
I think it would just be to work hard and have a good work ethic through everything. And personally, I would be very, very grateful that, we got the opportunity to do this. We were there, right place, right time. And we got to build this. So I would also tell my future self to have a lot of gratitude for what is in store.
Great. So let's talk about business, right? Because we've seen competition heat up. There are more and more players now entering in. Everyone's talking about Amazon, etc. How do you feel about competition?
I think it's a good thing. A lot of the innovation happens when there is more competition. Everybody's trying to think of better things to do because when the space has a lot of conviction from a lot of people, you have to do better things for the customers to stand out. So I think it will be a good innovative phase because everybody will be trying to put their best foot forward, and I think a lot of innovation will happen in the space because of that.
And what, according to you, is the number of players quick commerce can handle? So now, for instance, in food delivery, we have a very stable duopoly. But for instance, in e-commerce, there are so many players, even today, who are launching. What's your own vision for quick commerce? A duopoly, few players, or do you think this is an industry which can support many players?
I think as an industry, it can and it will support a lot of players. It is very hard to sort of predict how the spaces will evolve. Like 4 years ago when we started dark stores, it was a very different thing for people to think whether it will reach even this stage. And I think similarly trying to predict that future is going to be hard. But I feel that there are going to be a lot of players. There are going to be players that are going to be specialists in certain areas. And I think this is a very, very large space as compared to food delivery, so it should be able to support multiple successful companies.
Fair enough. Interesting to note that even fashion is now adopting quick commerce. We were just reading about Myntra and 30-minute deliveries. Which categories do you think will take the quick commerce route?
I think we will try with almost every category which is out there. Which categories become successful, I think it depends on execution. It also depends on consumer insights. See, at the end of the day, it is the consumers who decide, what they want faster and what they don't. So I think everybody will try different categories, and whatever consumers agree is useful for them, those will survive.
So Blinkit, what categories are you looking at next?
I think, just like you said, some of these categories that we are very excited about that we are scaling up, whether it is beauty, whether it's electronics, fashion, we are also working on them, and we are working on innovating and making sure that we can get the customers a very good experience in these categories.
Talk to us about innovation. That's the only differentiating factor. So what is the work that you're doing on the innovation front?
See, in organizations like ours, innovation is across many layers. It's technical innovation. You also have to do a lot of supply chain innovation. You also have to do a lot of innovation around, what products and how they sell on the platform. And I think for us, the important thing is to have an organization which has a culture of innovation. So whatever we do it well, we do it in a new way. Because really, like you said, that's going to be the only differentiator in the future.
So give me an example. For instance, right, quick commerce and grocery, how does it need to be different compared to quick commerce on electronics or quick commerce on fashion?
So I think, quick commerce and grocery tends to be a very, very low margin business. And typically when our old sellers came into the picture, we had to get a lot of support for them from different elements to make sure that they are able to maintain different businesses. A lot of the brands and sellers which exist, for example, in the electronics categories, they are much savvier, they're much more technically capable to be able to build their businesses. So the tooling that we have to build for them, the way that we build for them, I think these things are entirely different. And of course, the consumer moments of buying are very different. So we have to make sure that, we can be there for even a high value product like a vacuum cleaner as much as we can be there for a low value product like fruits and vegetables.
Fantastic. Thank you very much, Albinder, for joining in. The event is just about to start. So it's over now to IBLA 25, CNBC at 25.